From the morning reading, the spiders in IWM new all-time closing high as the spider closes above horizontal resistance. Best Buy in tap higher, Cisco lower on earnings. 7 of 10 sectors moved higher on Thursday. XLF, XLY, and XLK were the strongest sectors, while XLRE was the weakest sector. Oil futures down 35 cents to close at 45.50. Breadth strengthened compared to the prior session as advancers led 1590 to 1438 on the New York Stock Exchange and led 1695 to 1079 on the Nasdaq. On your S&P 500 snapshot, nearing a record close. Following Wednesday's negative 0.16% breather, the S&P 500 returned to rally mode, rising in a couple of waves to its 0.51% intraday high early in the noon hour. The index then traded in a narrow range to its closing 0.47 gain, a mere 0.14% below its August 15th record close. Individual investors have come back. The AAII survey this week showed another large jump in bullish opinion. Over the past 2 weeks, there has been one of the largest increase in bulls in the survey's history. That also ends the longest ever streak below 40% in bullish opinion. Usually a return of bullish opinion is good for stocks, but these were mixed blessings. The Russell 2000 has made it 10 in a row. Its current 10-day streak of up days ranks among the small cap index best since its inception. But considering its 13% overall gain, it ranks as the best ever. Other large persistent streaks tended to continue, or at least shorter term. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:11 a.m. Mountain Time, and I am recording this in preparation for the market day, November the 18th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. At the time of this cut, all 4 of the U.S. broad-based indices were positive, albeit they're all just above scratch. Crude oil is positive at about 0.75% up. Euro is also just above scratch, bonds just below scratch, and gold down about 0.4%. In overseas action, everybody was open. China down about 0.5%, Hong Kong up about 1/3%, Japan up about 0.5%, Germany just above scratch, and United Kingdom down about 0.25%. In terms of macroeconomic reports of note for today in the United States, you have FOMC member Bullard speaking, and then FOMC member George speaking. In terms of current volatility, things as you would expect when you're near record highs would be very low. Short-term VIX down in the lower 9 handle, 9.38. Skew is benign. IV percentiles all extremely low. S&P a 19, Russell a 24, the Nasdaq a 20, and the Dow a 21. We did have standard deviation size moves on a close-to-close basis yesterday in 2 of the indices, the S&P and the Nasdaq. So the Nasdaq, after having so much weakness, has put in some pretty strong action in recent sessions. The Russell and the Dow both were decent. We'll look at those charts in just a moment, but they were less than a standard deviation size move. Let's go ahead and go to those charts. I drew a new area of resistance up here, noting that I used the lower part as kind of the closing highs, and then the upper part is the all-time intraday high. And you notice that yesterday's action took us right up to the precipice of that resistance zone, and last night we continued to kind of probe that resistance zone, and this is very thin. This is just a handful of points. This is nothing. If the bulls were to manage some energy, I mean, they could easily blow through this in terms of just how far it is. Now, easy to blow through is another term in terms of how easy it is to actually get through this area of resistance. There's lots of people who are taking themselves out at targets at this point, and certainly we don't expect it to go through until it's proven otherwise. That's the definition of resistance. You expect that resistance will hold until it fails. And right now it's holding. So while recent sessions have been right up against this area of resistance and maybe even slight little probes, we've still held this resistance zone. So we'll continue to watch how we do against this. But certainly the S&P is absolutely pressing against. Now you had with the SPY, the cash only, this looks to be right at a closing high, right at it. An intraday high was 219.60. Yesterday got up to as high as 219.06. Again, just right up against this area of resistance. You take a look at the Dow, of course. The Dow has been also showing some exhaustion, some sideways, but has not yet retraced any significant amount. So it's just been kind of sideways movement at this point. So that is frankly probably pretty good news for the bulls. It could easily start another leg up at any time should the energy come into the market. And then the Russell, of course, has been putting in intraday new highs, as you heard one of the morning authors mention, 10 days in a row now. Just an unbelievable move. And let me draw a channel here, just a second. There you go. I want you to note how the Russell has been in a long-term channel since back last February. And look at where we are right now. So you've had this huge move and the 10 days that have basically taken you right from the very bottom of the channel all the way up to the top of the channel. So there wouldn't appear to be an awful lot of room left for this to run if this channel pattern is to be honored. Bottom line is this is a huge move. Normally the Russell might go 60 points or so without having a retracement. Anything past about 60 points is usually a pretty big move with no retracement. Certainly 100 points is huge. And this one has gone from, we'll call it 1150 to 1315. That is way, way, way past the norms historically for the rut to be able to go without seeing any kind of retracement. Now, obviously, this is driven by a special event with the election, changing the expectation for profits of these small companies, these growth-oriented companies in a big way. And this is a major sector rotation. That being said, there are going to be people starting to take profits. And as you can see, the candle bodies are getting smaller. And while we continue to make incremental new highs, which is very, very impressive for the bulls, we're also certainly starting to seemingly run out of room. Now, that isn't to say that we expect some sort of crash or anything like that, our big retracement, but understand you could have a 50% retracement, which would be a huge move in the Russell and still be in a bullish pattern. So that's just how big this pattern is. But I also wanted you to note the presence of that channel. Of course, the Nasdaq has also been doing quite a bit of improvement. And you see the recent action actually has given us a cloud breakout to the bullish side. Though in the big scheme of things, it's still just kind of maybe now upper middle of its sideways range. So it also has significant resistance up above it, much like the S&P being up against the resistance pattern. And then I think that's it for the indices. Let's take a look at the other markets. Crude oil, of course, has had something of a fib bounce and basically pretty neutral at this point. The dollar continues to make new highs and has clearly broken out from the prior swing high nearly a year ago, and it now is approaching its all-time highs of several years ago. With that strength of the dollar, you expect gold to continue to be weak, and it has been. So we continue to see breakdown there, and then also breakdown with bonds. Now we're up above the open at this point in the overnight section in bonds, but you can see we probed down below during the overnight. And then finally, volatility. Let's take a look at that. And you see very, very small range in volatility yesterday. And as you expect in bullish conditions, relatively low values. We're down here in the 13 handle. Not down in the super low areas yet, but certainly anything from 12 to 15 is considered, kind of normal bull market volatility. Let's go ahead and go to the daily report. And a couple of subtle changes here. We're still market phase 2 trend reversals. That's bullish. And our 3 market timing signals from IBD, the first one, confirmed uptrend, bullish. GMI index, a 5 out of 6, and the GMI 2's gone now to a 7 out of 8. That's a buy signal since 11:10, bullish. Stock charts, decision point scoreboard, we continue to see improvement here. Yesterday's session saw us get a couple new green intermediate signals, and then actually 2 days ago, and then yesterday's session gave us a new short-term bullish signal on the Nasdaq. So at this point, we now have 7 out of 8 signals on the short term are bullish, and then we have 1, 2, 3 out of the 8 on the intermediate term. So we're starting to see some improvement in the condition rolling up through the time frames, but you can see we still have some work to do. And then of course long term has still been mixed. So despite all the bullishness since the election, we're still, for the most part, especially in the broad markets, the big ones such as the S&P and the Nasdaq, are still dealing with being less than the all-time high. So we need to have a clear breakout by those broad market indices to kind of show that the broad market is truly setting itself up for something bigger and actually going to achieve something. 2 different models on our position sizing opinion, both at 100%. Intermediate term market posture, severely strong bull, supported by a weak bullish sentiment line. You see S&P up over 90 now, Dow almost as high as it can conceivably get, and Russell even closer to the 100 max number there. Only the Nasdaq is less than severely strong bull, and it's very, very close to doing that as well. Intermediate term market postures, certainly is our driving force here. It's our primary time frame for our investing and trading activities. Hedge warning status still level 1, looking for this intermediate term posture to improve before we call this a normal healthy bull market, which would be our 0 or 0 plus. So level 1 still is the hedge warning status. There's always danger when you're up against resistance that it will, honor that resistance and we'll get a failure of these markets and coming back down. Let's see, no change in strategy opinions from yesterday. Still relatively balanced between the opinion giving us permission to initiate new positions on each of the strategies, while yet being relatively defensive and selective, given that we're right up against these significant areas of resistance on the S&P and Nasdaq. In terms of specific warning areas, you continue to see very, very little here. Almost everything is in a kind of benign or non-warning status. Only the distribution day count on the Nasdaq, which currently sits at 7, is in warning status. Trend-based, nothing in warning. In fact, good strong bull signal here, well over 300 on the New York Stock Exchange, new high, new low indicator. All 5 of the key intermarket risk aversion indicators are in risk on status. You see the fear and greed index is 63, so strong there. And then also on our sector specific, financials back in where they've been recently, heavy green and good performance, consumer discretionary, information tech, healthcare, all the sectors that have been benefiting with the sector rotation since the election were back in their usual places. And on the flip side, the ones that have been getting hurt since the election, utilities, consumer staples, real estate continue to dominate the bottom. So the sector rotation continues to polarize the winners and the losers on both sides. In terms of the market posture by sector specific, you continue to see consumer staples, utilities on the bottom side, and then also a lot of green, frankly, on most of the risk on kind of areas of the market. And financials, again, back into the green across all the time frames. Also, technology in the green across all time frames. Overall S&P index now in the green across all time frames. So we're starting to see building some consistency, as you would expect, as you're near all-time highs in some of these markets. That should be enough for today. Let's go ahead and wrap up. And I'll scroll through these. If you see something of interest, just hit the pause button. I've talked about the YouTube channel and the emails of late. I will spend just a second here. Do note that I do provide what I call daily price guides for 16 key markets, 8 futures markets, all for the index, bonds, gold, crude, euro, all key markets. Extremely helpful tool to help if you are an intraday trader especially. But if you need more information about this, just go to this website right here. This is only $25 a month to have these emailed to you each morning before the market opens. So something to check out there. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note that the hyperlink down here at the bottom will take you to the full set of disclosures. We'll be back here on Monday morning with our next Falcon Global Market Preview. In the meantime, manage that risk profile of your portfolio. If you do that well, you'll find the consistency that you've been looking for. And of course, each and every day, we encourage you to go out there and learn something about your craft. Good trading.